In this presentation, we will continue on with our comprehensive proprietorship problem. We will be working with the financial statement. We're going to be continuing on with the balance sheet, this time working with the liability. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Section of the balance sheet. Remember last time, of course, we did the assets section. We found a home for all of these green accounts. And I'm actually going to indicate that first. I'm going to highlight these areas here and put a little yellow mark. I'm going to right click and put a little yellow mark. And that's going to indicate we found a home for all of these. And once we put a little yellow mark indicating we found a home for all of the items on the trial balance, then we should be good. We should be done. We should be in balance. Everything will be great. Okay, so we're going to move to the liability section now. Before we do so, note that the balance sheet title, of course, is the balance sheet, and we should have the name of the company if we had one. This is just an example. We don't have one, but any kind of problem you have, if you're working a test question or obviously in real life, make sure to have the name there. Sometimes people put substantial test question points on the title of the financials. Okay, and then we've got this is often going to give you a lot of points too on a test type question. You want to make sure that it's the date of a point in time. If, for example, you put the date as for the month ended on the balance sheet, it's not technically correct. I mean, you could say this is for the month ended of January. However, it's really only representing the end of the time period. So, I mean, if it was, in other words, if it was the end of the month, the end of the year, the end of the week, the end of the day, the financial statement would be the same. So it means nothing, in other words, to say it's for the month ended, because it really just is for the end of the month, for the point in time, for that ending time period. So you want to be able to know that every time on a test question. You want to be able to think about that more and more to really understand why that is the case as well, just to better understand the financials. Okay, moving forward, we're going to do the liabilities. It's just going to be these three accounts. Those are all the liabilities we have. And we typically break out the liabilities similar to the assets, but a little different. We have the current liabilities, which is very similar to current assets, so it's similar kind of breakout there. And then, of course, we got the long-term liabilities, which this is more of just an arbitrary break for the liabilities. We just basically say, is something going to be due over a year in the future? If it is, then it's long-term. So in other words, if we have a loan and we don't have to owe it back for 5 years, well, then it's long-term. If we owe it back within 1 year, any time frame within a year, then it's short-term. What if, you might ask, the loan has some of the principal due within a year and some due after a year, such as a mortgage payment or some type of loan set up in a similar fashion where we make monthly payments of both principal and interest? Well, then we'd have to break out a portion of that loan as short-term and a portion as long-term. We won't get too into the details on that, but just note that it's an arbitrary break. So we just got to break out our three accounts here, or just three accounts, into short-term or long-term. Accounts payable, short-term, typically 30 to 60 days, we got to pay it. Wages payable, short-term, typically current, because we're going to pay it as soon as we pay the next payroll, which is like in a couple days, like a week maybe. And then we have the unearned fees, which is usually current as well, because we typically will be doing the work within the next year or so. So these are all current, and we don't have a long-term portion, which we'll have to think about how we're going to deal with that. We have the same current liabilities thing here as a subcategory of liabilities, and it has a colon represented that it will be a subcategory. And then we're just going to put in these amounts. We're going to do that with our formulas again. So in J5, we're just going to say equals, point to the accounts payable, and enter. We could copy and paste. You could type it in there. I would copy and paste or use formulas in order to reduce any spelling error problems. And so then we're going to do it for J6 equals and the wages payable. At least if we have spelling errors, they'll be uniform from the trial balance over to the balance sheet this way. And then in J7, we're going to say equals the unearned fees. So they're all current. Again, you could do that with the autofill function a little faster. So we'll show that now. I'm going to delete these and show the autofill to show it quicker. So you could put your cursor on accounts payable, put your cursor on the fill handle, left click on it, and auto drives it down. Dr. Phil does the calculations, which is just spelling in this case. Dr. Phil does the spelling of wages payable and unearned fees. Now we're going to bring this amounts into our columns. So note once again, it's a subcategory indicated by the colon, indicated by the indentation, now also indicated by the fact that we're going to put it on an inner column rather than an outer column. That inner column and outer column not representing debit and credit, but subcategory. No debits and credits. That's the point of the financial statement. To further emphasize it, we're going to remove this credit that's indicated over here by bracketed numbers. To do so, instead of hitting equals within cell K5, we're going to say negative. So negative of the 11,000 and enter. And then in K6, we're going to do the same thing. Instead of equals, negative of the 1,005. And then in K7, instead of equals, negative of 3,000 and enter. Once again, you may ask, could we do the autofill function there a little bit faster? We could. I'm going to delete this and show how, which probably is apparent at this point, but we're going to put our cursor on the 11, put our cursor on the fill handle, left click, and just drag it down, and the relative reference will be there. And once you get the handle on those relative references, you'll be able to see them all the time and be able to shorten your work down massively, which is nice. So now we're going to put our cursor on the 3,000, underline it by going to the Home tab, Font Group, underline. Then we're going to put total liabilities. Now there's a bit of a trick here. Remember that we don't have long-term liabilities. So instead of saying total current liabilities, we're just going to say total liabilities. And that may seem odd at first. And note what our options are, the reason why we're doing this. What could we do instead? Well, we could put total current liabilities and sum them up over here, and then put another total underneath it saying total liabilities, because we don't have any others, just to say, hey, these are all the ones we have. Or we could just leave it at total current liabilities and not indicate total liabilities and just say, hey, we don't have any other liabilities, that's why we just left it at total current. Or we can just call the total liabilities, even though it's kind of a subcategory of total current liabilities. And that's what typically is done here. So we're going to say, look, it's a subcategory of current liabilities. We put them inside to indicate their current liabilities. But when we subcategorize it outside, we're just going to call it total liabilities, because total liabilities are equivalent in this case to current liabilities. Okay, so I hope that clears that up a bit. So we're going to sum these up then. We're just going to use our sum function equals the SUM. Double click that sum function and highlight the 11,000 to the 3,000 and enter. So there we have it. Now if we want to double check that number, we just highlight the three numbers over here and they're 15,500. But this is a credit, you may ask, and that's a positive number. That's okay, because we're just going to reformat this to a plus and minus format. So the numbers are right. If we have a properly formatted Excel worksheet, it'll just say, hey, these are credits adding up to 1,500. It's a negative for Excel, credit for our purposes in this context. Over here, it's just a positive number, plus and minus 15,500, still checks out, looks good. Next time, we're going to go to the equity section, and we're going to then be able to hopefully tie out our assets equal our liabilities and equity on the first step, and basically tie out all these accounts down through at least liabilities here. I'm going to highlight these and indicate that we found a home for them by selecting those items, right-clicking on them, and putting a little yellow thing there. So we found a home for all the assets and liabilities. We've checked them. We're pretty confident that those numbers were correct. If total assets do not equal total liabilities plus equity after we do this last portion, the equity portion, it's probably the equity portion's fault, because these two numbers we're pretty confident on. For more accounting information and accounting courses, visit our website at accountinginstruction.info.